Hello, this is Bob Joyner, and in this video we're going to answer the question, is scalping the best day trading strategy? So to be clear, scalping is actually a type of day trading. Both trades have to be executed in the same day, but there are some distinctions between scalping and day trading. Three things come to mind. One is time. Of course, a scalping trade is a very quick trade. Sometimes can last seconds, sometimes can last a few minutes, whereas a day trade might last anywhere from 5 minutes to, let's say, a couple hours, as long as both trades are executed and finished in that same day of trading. Another area is attention. If you are going to be scalping, you cannot be doing something else. Okay, you cannot be checking your email or using the restroom or eating lunch or whatever. If you're scalping, you need to be right in front of your computer screen, and you need to dial down exactly to what's going on. And I'll give you a few examples of scalping in this video. Another area is retracement. Normally in scalping, what you want to do is you want to wait for some little flip back retracement before getting into that trade, just to make sure that you maximize the amount of profit that you can get out of that trade. Whereas in day trading, sometimes you can just jump on board. If the trend is intact, it can work out. Actually, you can be a little bit more graceful. But with scalping, it's not very graceful. It's not very forgiving. So you're either right on the money or you're not. So I'll give you a couple strategies and ideas to check out. One of those is to combine direction and momentum. So for example, if you can look at a chart and you can know that the direction is bullish, as indicated by this green arrow, then you could take that trade as a day trade and watch it move up, and then move your stops accordingly as price continues higher, taking your profit. But with scalping, it's a little bit different. With scalping, what you're trying to do is you're trying to ride that trend up on the smaller time frame, let's say a 1 minute chart that might agree with that 5 minute trend. So you're trying to make the move up. You want to take the profit as price agrees with that trend, but then as it comes down, you want to be out of the trade. You're not holding it through that pullback period. Whereas with a day trade, you might be okay and a little bit more patient, letting the price work itself out. With scalping, there is no patience. If it's going against you, it's going against you. You need to be out of the trade. And then you're waiting for that next loop up, and then you're going to take the next run up that agrees with that trend. You're going to trade the momentum that agrees with direction, right? But then when it comes back down, you're out of the trade, and then you can actually get back into the trade again. Now the net result might be the same. The beginning and the ending point of the trade for the scalper or for the day trader might be the same. Okay, but the difference is a scalper is not accepting any of that negativity. You're out of the trade as soon as it becomes negative and goes against you, and then you're waiting for another area of support. But this is an example where on the 5 minute chart here, you've got Heikin-Ashi candles and you've got a 7 EMA as the yellow line here. The trend is obviously bearish during this period after about 12:15. And if we drill down to the 1 minute chart and place a 20 EMA on that chart, then as price comes up and challenges that 20 EMA within the context of this bearish context, then you have a high probability short situation coming up, because it's more than likely it's a high probability it's gonna hit resistance at the 20 EMA, and then you're taking that little push down and getting out of the trade. Comes back up to challenge the 20 EMA, get into the short position, you take profit when it comes back down. And you're doing that over and over again as many times as you want, rather than being patient and seeing the big trend as it unfolds. You're just trying to move in and out quickly and scalp little profits, taking none of the downside and taking all the upside of those trades. On this chart, I've kind of circled those two areas I mentioned to you so that you could see it more clearly, and it's reflected on both screens. Another strategy for doing scalping trades is support and resistance. As price moves up to an area of overhead resistance, there's a high probability that there's going to be at least an initial reaction to that overhead resistance, especially if the trend is down already and you're coming up to an area of overhead resistance. There's a very high probability that line of resistance is going to be met with price reverting back down, at least momentarily. Okay, so that momentary pushback against support and resistance can be a scalping trade, but you have to be very careful with it. But there's a high probability that as we come up into that area of overhead resistance, price is going to flip back down and you have an opportunity for a scalping trade. And the reverse is true. If you come down into support, there's a high probability, especially if you are in an uptrend overall and you come down to an area of support, the price is going to flip up on that, at least temporarily, and you can scalp a position out of that. You can use pivot lines recent historical price action and other indicators to find that area of support and resistance. And to illustrate that, this is a chart from the SPY on that same day, Friday, 2 days ago. And this thick red line that you can see up here on this chart, this is a 5-minute, 1-minute chart, but this thick red line up here was an area that was going to be an area of overhead resistance. And you can see what happened. We came right up to that line, debated it for about 10 to 15 minutes, and then we finally flipped down. And so that became a short-term scalping situation. In this case, it made a nice move up, but again here, you would take the move down on this 1-minute chart, and these are using conditional colored candles on TC2000, and I have videos about that if you're interested. But you would take that move down until you see high momentum red bars, and then you'd be scaling out of that trade, taking profit, moving stops, whatever your trade management style is. Then you would take none of that upside, and then you would come back up here, and then you could easily have shorted again and taken another move down to that same area and gotten 2 runs as a scalp out of that trade, rather than holding it the whole way down as was reflected here on the 5-minute chart. So the keys to success with scalping, a couple that come to mind. One is follow the rules of your strategy. You've got to have some strategy. I just told you 2 possible strategies. You can develop your own, or you can practice these that I gave you and repeat them over and over again until you get really good at them. But follow the rules of your strategy. If it doesn't follow your rules, don't take the trade. All right? Keep your losses small. This is critical, very critical for scalping. What you cannot afford to do in scalping is to take a little 0.5% profit on a trade and then you take a 5% loss because you failed to get out when things reversed. So if you're going to scalp, you've got to be, like I said, you've got to be intent on that. You've got to be very attentive to the trade. You can't walk away from it and hope it all works out. If it's not going for you, then it's going against you. Okay, never hold a trade overnight. This is true for day trading or for scalping strategies, either one. And when in doubt, get out. You can repeat that phrase to yourself. When in doubt, get out. Okay, if you have any questions at all about the trade, get out of the trade. And then a couple of tips for scalping. Trade stocks with higher volume. You want plenty of liquidity. Trade stocks with good volatility. You do want stocks that are moving. You don't want to, you can't scalp a stock that's just flatlining, right? Okay, so you've got to have some volatility, but at the same time you want to avoid stocks that have this kind of jerky price movement. Sometimes in the morning sessions with trades that have run up, stocks that have run up in the pre-market session, you'll see some crazy volatility spikes. There's no way you can capture those when it's just that jerky kind of movement. What you're looking for is a context that's clear and clean, and then you can scalp within that movement. And then become highly selective in the trades you take. Okay, every trade's not the perfect setup, so wait for the perfect setups because you're only going to be in that trade for a few minutes. So you can be highly selective and only take the ones that exactly measure up. Thanks for watching this video. Hope you subscribe and ring the bell so that you can see other videos later on. And here are the few other videos that you might be interested in. Alright, thanks for watching.